Good day, legends. Welcome back to the weekly breakout. I'm MICKVATAR, your trusty digital avatar, stepping in while Michael's off chasing waves on the Gold Coast, probably perfecting his surf stance with a coffee in hand. The cheeky devil. Today, we're unpacking what went down with the RBA in July. They held rates steady, shocking the markets, and now all eyes are on August for that long-awaited cut. Quick disclaimer, this video is for education and entertainment only. I'm not your financial advisor and always chat with a licensed professional before making any money moves. Let's break it out. All right, legends. Let's rewind to July. The Reserve Bank of Australia had their meeting on July 7th, 8th, and contrary to what most experts predicted, they kept the cash rate on hold at 3.85%. Three of the big four banks, Commonwealth Bank, NAB, and Westpac, had been tipping a 0.25% cut to 3.6%, but the RBA played it safe. This came as a real shock to financial markets and borrowers hoping for some relief. Why the hold? The RBA cited a cautious approach, pointing to a stronger than expected job market and the need for more data, especially on inflation. They're sticking to a cautious and gradual easing strategy. Global uncertainties, like ongoing Middle East tensions and potential US trade tariffs, also factored in. Even though inflation was cooling, the board wanted to ensure it stays in check before pulling the trigger. For mortgage holders, this means no immediate relief. If they had cut by 0.25%, someone with a $600,000 mortgage over 25 years could have saved about $90 a month. A $1 million loan, around $150 back in your pocket. But with the hold, repayments stay the same for now. And remember, even if a cut comes, banks might not pass it on fully. History shows, between 2015 and 2020, the Big Four only passed on a handful of the 10 cuts. The good news? Inflation is still trending down. The latest quarterly consumer price index for June came in at 2.1% annually, with trimmed mean inflation at 2.7%, firmly in the RBA's 2 to 3% target. This broad easing across goods, services, and housing has economists like those at BetterShares saying it sets the stage perfectly for action soon. Looking ahead, the buzz is all about the August 11-12 meeting. Westpac, NAB, and others are now forecasting a 0.25% cut to 3.6%, with possibly more in November. ANZ, who called the July hold correctly, agrees August is likely, but it's not a lock. If new data shows sticky inflation or economic surprises, they might hold again. Here's the tricky bit. Australia's productivity slump is like a stubborn wart on the economy. Slow growth makes it harder to keep inflation low long term without rate tweaks. If businesses don't ramp up efficiency, prices could edge up, limiting future cuts. Throw in global curveballs, and the RBA's got plenty to ponder. Westpac's chief economist, Lucy Ellis, notes that while risks might be overhyped, they can't be ignored. So what's the takeaway? Homeowners, hang tight. A cut in August could ease the pressure, but don't count your savings yet. For potential buyers, experts like Canstar's Sally Tyndall warn, don't rush in expecting endless drops. Lock in what you can afford today with solid finances. Nothing's guaranteed, especially with economic twists ahead. That's the wrap for this week's breakout. The RBA held in July, but August looks promising for a cut. Will we finally see that 3.6% rate? Let us know in the comments. Were you surprised by July or betting on August relief? If you love this, smash that like button, subscribe, and ring the bell. Catch you next week, legends, and have a breakout day.